Okay, so greetings. Let me make sure. One second. Okay, so it looks like we have everything set up properly, connected on. Are we connected there? I hope that everyone is having a fantastic time, no matter where you are. It could be morning, could be in the States, and it's 6:30, 6:30 Central, 7:30 Eastern. And if you are cool kids, maybe over in one of my favorite places. You may be in Southeast Asia, where it is currently 6:33 p.m. Let's get it. Today is March the 24th. We're going to talk about the number one reason that you keep blowing your account. Now, let's cut the excuses. If you have blown your account more than once, more than twice, it's not the market, it's you. Years ago, I used to say the issue is you. It's you. You might keep telling yourself that it's bad luck or that the market makers got ya, or that there was a crazy market. Maybe it was a news event that you didn't see coming, but deep down, you know the truth. Today, we're going to break down the number one, the greatest self sabotaging behavior that is keeping you broke. And we're going to go over exactly how to fix it before you wreck your next trade. Now, I'm going to need some honest people in the chat. So if you've ever blown an account, go ahead and type me in the chat. And while I'm waiting on that, so years ago, I was watching this documentary, and it was a UK based documentary. This guy was talking about his hedge fund, and he used a very interesting phrase that I encourage all of my students and clients to start using instead if that ever happens, because we're practicing the art of reframing. He said, after a tremendous trade, it could have been in the billions of dollars. I don't remember the exact amount of the trade. He said that they had to recapitalize. Say, what? What does that even mean? He said they had to recapitalize. What a sophisticated way to say that they blew their account, right? So going forward, we're reframing, we're saying we have to recapitalize, but at the same time, we are avoiding those behaviors. So let's talk about the self destructive cycle that's keeping traders poor. The weird part is that it always starts with a small mistake. It's a trade that perhaps didn't go your way. So instead of taking the loss, you feel the need to quote unquote get it back. What about when that over trading starts to kick in and you start forcing the setups that aren't there? So what do? You increase your size, start chasing moves, and then suddenly your strategy just flies out of the window. That leads to the purgatory emotional spiral where perhaps you double down after a loss, thinking your quote unquote luck has turned around, and before you know it, what happens? Your account is gone. I'm just wondering, does this sound familiar to anybody? Does this sound familiar? Does this sound like something you've done where you start with something small, that I'm gonna get the market back, then you over leverage, you over trade, you increase your size. What strategy? No strategy. The strategy is to just be in the market. You double down and then whew, everything is gone. If this sounds familiar, you're caught in the trap. You're caught in the trap. So I want to know, what do you think is worse? What do you think is worse? Closing a winner too soon or revenge trading? If you think closing a winner too soon is worse, type 1 in the chat. If you think revenge trading is worse, type a 2. So here's another hard fact. The market doesn't steal your money. You hand it over. The market doesn't steal from you. It doesn't take from you. You hand it over. And a unique reason why is because of what's called the gambler's fallacy. I want you to write that down. The gambler's fallacy. So you think that after a streak of losses, oh baby, I'm due for a win. I know my win is next. And so what happens? Increase your risk. So instead of previously sticking to a plan where you're risking 1%, for whatever strange reason, you found your way to risk 10%. The gambler's fallacy is what happens when you think that just because price has hit support 5 times, it has to bounce. And so you bet big, baby. Bet bigger than big. The gambler's fallacy causes you to believe that one more trade will fix everything. Everything, everything. And guess what? It won't. This is exactly how casinos drain people dry. And if you, my friend, are not careful, if you are not watchful, if you are not disciplined, doesn't matter what market you're trading. Forex, stocks, commodities, futures. The market will do the same to you. It will drain you dry. I'm really curious to know how many trades from the people that are watching this live, and even if you're watching the replay, I want you to leave down in the comment section how many trades do you take per day? Type the number. So when you're watching this back, type the number in the comment section. How many trades do you take per day? And I want you to remember that number because towards the end of this, we're going to talk about why that number is important. How many trades do you take per day? Here's a quote. A professional trader waits while a gambler reacts. A professional trader waits while a gambler reacts. Let's talk through this, right? Here we have USDJPY. This blue line is signaling the most optimal entry. Enter this trade. Typically, I don't enter trades on Sunday. However, it's not up to me when the market presents itself, right? That's the cool thing about being a trader is that even though you have certain rules, you can break them, but you have to break them based on your history and knowledge and wisdom of the market. So let's say you got in at this blue line, and let's switch to an hour chart so you can get more information. Notice how these candles here after 10 last night, it just started. This is where we got in, right? Sunday. You see that? 1, 2, 3, 4, 5, 6, 7. Some people aren't familiar with holding trades for more than 15 minutes or holding trades for more than an hour or holding trades more than a day or more than a week. We just finished up a trade. Let me see if we can bring that up really quick. And I want you to go back and watch the live. That live was where we held a trade for right at about 50 days. Right at about 50 days. I'm not going to play the video. So if you've never held a trade more than 10 minutes and you want to learn how to, or you never held a trade more than 5 minutes and you would love to learn how to, that's what we talk about in this video. It's called How to Hold a Forex Trade for 50 Days Using Psychological Price Levels. This trade, and what I like to explain is that if you're interested in holding trades longer, there's no fundamental difference from trading the 5-minute chart to trading the daily chart. There's no fundamental difference. And what I mean by that is the candle psychology that occurs on the 15-minute would occur on the daily. And I want you to think about that because on the 5-minute chart, What is the length of time for 50 5-minute candles? Answer that question. What is the time equivalent for holding a trade for 5-minute candles? Because what I want you to realize is that holding a trade on the daily chart, the fundamental behaviors, the psychology. Now, granted, it requires more patience, more confidence, more insight to how the market is going to perform. But entering based on one candle and holding it for 250 minutes, it's the same philosophy. My adage is if I can, you can. So you're basically at a 4-hour candle. Think about that. And so the point that I'm making is that a professional trader waits on the opportunity, they wait on the market, and then I'm going to switch back to the chart so we could talk about USD JPY briefly. This is not going to be a technical analysis lesson, but what would a rookie or novice trader have done? Oh man, 1, 2, 3, 4, 5, 6, 7, 7 candles down. It started going down more. I'm getting out. It's too close to my entry. And how many times does this happen? Think about it. After this market was going down for a bit, broke this low. You see that? Broke this low. Oh man, I'm gonna get out. I don't wanna, or I'm just gonna secure. We talked about this yesterday in the live. And I'm just gonna secure a little bit of profit. I don't want to lose no more money. It was all the way up here. Now it's down here. Don't act like you don't talk to yourself. I know you talk to yourself. You got to. Who else are you talking to these charts about? Who else are you talking to these charts about too? What a funny statement. Who else can you have this conversation with? You can have it with me. We could talk about it. And the only reason I know what's in your head is because I've been there. Man, it was all the way up here. Man, I was up 75 pips. Now, man, it's like 5 pips. Let me go ahead and get out. And look at what the market did. Shoot, shoot, mink, mink, turn right around. Mink, mink, turn right around on you. And now what are you doing? Fighting the air like Cuba Gooding Jr. on Boys in the Hood. Because trade is not good. Anyway, let me stop. So here's going to be your challenge for the day. You're going to limit yourself. If you are an intraday trader or you scalper or whatever, limit yourself to a max of 3 trades today. That is your maximum. Now, if you're a swing trader like me and you use the daily chart, limit yourself to a maximum of 3 trades this week. You are going to force yourself to be selective. Force yourself to be selective. Think about it as you would when you're dating, no matter what your preference is. Let's take me, for example. I won't throw you under the bus. There are there is an abundance of beautiful women. Let's just be honest. Let's be adults real quick. Beautiful women exist everywhere you look. Don't go to Atlanta. Oh my gosh. Don't get on TikTok. Everybody's beautiful on TikTok. But just because one has an affinity for beautiful women, does that mean you try to holler at every woman that you see? Hey, shorty, how you doing? What's your name? Hey, you beautiful. I want to take you out. Uh, I ain't never seen somebody so beautiful before. No, ew, it's creepy. Think about it. It's creepy. You have a preference. You're selective. Maybe you only date women that are 5'7" or shorter. Maybe they have to have this sort of background. Maybe they have to have this sort of style. You're being selective. You have preferences. Now think about the person that just tries to date every person that they see. You're going to be tired, drained, stressed. You're probably going to come across some people that you don't want to come across. I didn't have a PG way of saying it. So listen, force yourself to be selective today, this week, because if you're not able to be selective, if you can't do that, then you are not trading, my friend. You are simply another gambler that is just feeding the market. And professional traders like me, we wait and we say, Hashi Tashi, thank you so much. Thank you so much for getting out of this spy. It allowed me to get in here. Thank you for selling out of this position so I could buy. So if something that was said caused you to think differently, I want you to drop a fire emoji. If you're watching the replay, drop a fire emoji in the comment section. If you're watching the live, drop a fire emoji in the chat. Okay? Because this day, you only have to focus on today. This day, we are trading smart and we are not getting played. Okay? So keep in mind, we're testing out the best times for the live. Looking at is before the London going to be the best? We were previously doing lives around 12:30 Eastern when so for the month of March, been doing a tremendous amount of travel. So that didn't align. I want to make it effective and also convenient for the most numbers of our subscribers. So if you're not subscribed, go ahead and do that. Go ahead and subscribe. It's free. It doesn't cost you anything. But that way you also will turn on the notifications so that you get the alert when we do go live. So this week we're going to be piloting 6:30 a.m. Central Standard Time prior to the New York Open to give you the psychological edge. Oh, I had a frog in my throat. I'm gonna go get some coffee to give you the psychological edge that you need to be prepared to enter the market. So tomorrow we're gonna expose how smart money tricks you in to losing. That's going to be our topic. So I hope you'll join me. And if this video gave you an aha moment, I'd love to hear about it. I do read all the comments and respond to the comments. So feel free to reach out. And until the next time, take care and trade safe.